As you think toward retirement, one of the biggest questions that comes up is how much money do I need? And $1 million is a nice round number. That's a popular answer for people. But the question is if it's the right number. So do you need $1 million to retire comfortably? And what can you expect if you have that much saved? Also, what could you expect if you have less than that or if you have more than that saved for retirement? That's what we'll cover in the next couple of minutes here. And of course, I can't tell you exactly what you need in a video like this, but we can look at multiple scenarios, and one of these might match your numbers so you can get a decent idea of how things might look. And even if you don't see a match here, I'll have a link to a handy calculator in the comments below so that you can enter your own numbers and get some more customized estimates. It'll either be this calculator you see here or one that basically does the same thing. So do you need $1 million to retire? The short answer is no. In fact, most people don't have $1 million. They'll never see that much or anything close to it by the time they retire. If we look at some data from the Federal Reserve here, this is the median retirement savings for people of various age groups that are in the retirement range. And you can see that most of them aren't even above about $200,000 of median savings. Of course, the median is when you line up all the answers from highest to lowest. The median is the one in the middle. If we look at the mean, that will be higher because of those with extra assets. These are wealthy people. They bring up the average, and even that is not even above $500,000. However, you might still need $1 million to retire comfortably depending on your situation. Obviously, having more money gives you more options, more comfort, and it just makes things easier. The exact amount you're going to need ultimately depends on things like your spending level, your health, what type of surprises or luck you have, your geographic area, and other factors that impact your spending. I realize that may be an unsatisfying and it's certainly a non-committal answer, but it's the most honest answer you can have in a video like this. Your situation is unique, so it's really going to depend on your circumstances. Rules of thumb and estimates can help you get a decent idea of whether things are in the realm of possibility or if you need to make big changes. So it can certainly be helpful to use some estimates that we're about to walk through. Once you've done that, then it's a great idea to refine those estimates and get some more robust planning done. And you can do that yourself, or you can work with a financial advisor like me to get those answers. But either way, it's important to get more detailed information before you make a big decision. So how much retirement income can you get if you have $1 million or more or less? And is that enough for you to retire in comfort? Let's make some estimates using different assumptions, and in particular, we're going to change two things. One of those is the withdrawal rate, or how quickly you pull money out of your retirement savings. The other is the amount of income that you get in retirement. So this might be your Social Security income, maybe a pension, and then we have to think about, do you have two incomes in your household? Is it just one income? That's going to affect how high that income level is. So we might start with a 3% withdrawal rate, saying that you have $1 million in retirement assets and $30,000 of retirement income. Again, that's maybe a pension and or Social Security, whatever the case may be. And of course, we can't ignore taxes. We'll get to that in a minute. But let's say you have $1 million in assets. You're going to use that 3% withdrawal rate, which gets you $30,000 of withdrawals in your first year. You're typically going to increase this with inflation over time. So you might think of this as year one income. And ideally, that would increase over time. If you prefer, you could do a 4% withdrawal rate instead, and that would get you $40,000 per year of income. We've talked about the various withdrawal rates on other videos on this channel, and of course, the higher you go, the more risk you take. It's more likely that you could possibly run out of money, or that you have to be willing to make some changes, perhaps taking pay cuts if the markets don't cooperate throughout your retirement. Then you've got $30,000 of Social Security income. So on this 3% column here, we've got your Social Security, $30,000, plus the $30,000 withdrawal, that might be $60,000 of income. If you go with 4%, $30,000 of Social Security, $40,000 of withdrawals for a total of $70,000, and you can see it in a chart because who doesn't love a chart? But if we change that, let's say you only get $18,000 of Social Security. As you can see, the Social Security will be a much smaller proportion of your total income. So this Social Security is a nice government guaranteed inflation adjusted source of income, but it makes up less of your total income. That's important for you to know as you think about your retirement success. Moving that back up to $30,000, let's talk just a bit about taxes. Let's say you are doing that 3% withdrawal rate, but you don't necessarily get to spend all of that money or keep all of that money. If you have saved up $1 million, there's a decent chance that you will have to pay some income taxes in retirement. That's because you're probably going to be taking withdrawals out of pre-tax accounts, and that may be taxable, or maybe a portion of your Social Security would also be taxable. So if we look at an all-in tax rate of, let's say, 10%, that might be your federal plus your state, the total amount you might have left for spending is $54,000 of that $60,000. Then, of course, you can look at these different tax rates and then the different amounts that would be left for you to spend. But let's look at a different asset level. Let's say that you have $500,000, just half of that saved for retirement. Then again, we go to this 3% withdrawal rate. You're getting $15,000 per year. The Social Security income is the same for a total of $45,000. In this case, as you can see, the Social Security makes up a big portion. So a lot of your income in this case is that government guaranteed inflation adjusted Social Security payment. So that's, again, important to know. And then after taxes, you end up with a bit less. Depending on how much you have saved, you might or might not be paying much in taxes. It just depends on your return and where you live and a lot of other factors. If your household has more than one person in it, it could easily be the case that you have $50,000, for example, in Social Security income with $500,000 in assets. And in that case, you're getting back up there in terms of what the total income looks like. It could be $65,000, $70,000 per year. And we can even look at, let's say, a married couple filing jointly with $250,000 in assets, but a nice Social Security income. They could even get more than this, possibly. They might be able to have about $57,000, $60,000. Of course, after taxes, it's less than that. But they might have some spending money based mostly on that Social Security income. Now let's jump up to some bigger asset levels and we'll see how those look. We also need to talk about some of the limitations and complications that come with doing estimates like this, because this isn't a perfect way to do it. By the way, I am Justin Pritchard. I help people plan for retirement and invest for the future. And like I said in the description below, you're going to find a link to a calculator just like this, or it functions the same way even if it looks different. I hope you find that helpful. There are also some general retirement planning resources that I think you'll find really helpful, so be sure to check all of that out. Also, a good time for a friendly reminder that it's just a short video. It can't possibly cover everything, so you really do need to do more homework and verify, triple check things with your own financial professional, attorney, and tax expert. With $1.25 million, you can get into six figures of total income or gross income before taxes, or at least get near that. Of course, if you have less Social Security income for whatever reason, that may reduce the total amount you're going to have available. So again, you just want to play with these two inputs and figure out what it looks like with your asset level plus your retirement income sources. Then maybe we'll just look at one more and glance at the $2 million figure with $25,000 of income. You can see what you have there. Let's say you've got $50,000 of total income. That gets into some pretty healthy income. Now, we've looked at some numbers, but these are obviously an oversimplification. So whether or not you'll have enough depends on your lifestyle and other factors, geographic location, health, luck, and more. You also want to think about things like how inflation might change your spending level over time. You need to have some way to account for that so that you can maintain your purchasing power. It's also important to think about what changes you will experience, such as reducing your spending as you age. I've got other videos on that topic, but it's nice to know that people don't necessarily increase their spending right in lockstep with inflation throughout retirement. There might be some varying patterns, whether that's the go-go, slow-go, no-go years, or something else. You also want to remember potential spending shocks. So these might be surprises that come up. These might be big healthcare events that you have to pay out of pocket for. So we don't necessarily want to rely too heavily on numbers out of a calculator like this. Again, it's a nice back-of-the-napkin estimate, but it's just a start, and from there you really do want to refine things. Those taxes are something we glanced at, but that can get really complicated, so you want to take a closer look at that. And there may even be some tax strategies or other strategies that you might pursue that you can't really model in a spreadsheet like this. As just one example, you might do a Social Security bridge strategy. That might be if you retire at age 62, for example, but you wait until age 70 to claim your Social Security benefit so that you can maximize that Social Security income. You would, of course, be spending down your assets at a higher rate while you do that, but it can really help increase the amount of lifetime guaranteed income you have. Then there's the possibility of an early death. We looked at what might happen if you have multiple sources of income coming into the household, but if one of you dies, what happens? One of those incomes might go away, and plus the surviving spouse may end up facing the so-called widow's penalty. That's where they get bumped into a single taxpayer's bracket, and they may have to pay taxes at higher rates. Ultimately, there's a lot of uncertainty whether that comes to how you're going to spend your money. Is it flat and level, or does it come out in lumps as different surprises and events come up? Or what is the market going to do? How is that going to affect your retirement? I'm also going to have a video pop up here that shows you about taxes in retirement. So that can help you set some realistic expectations in terms of what you might get and what you might get to keep and spend. So I hope you found all of this helpful. If you did, please leave a quick thumbs up. Thank you and take care.